Well, let's now catch up with Tom Waterhouse from Waterhouse VC to explore the rapid growth of prediction markets and the challenges and shifting gambling regulations as well. Good to see you again, Tom.
Thanks, Andrew. Good to see you too.
Yeah, prediction markets. In fact, you're going to mention a couple here. Polymarket I know of. Kalshi I'm less aware of. Why have they exploded in popularity?
Look, they really took off around the presidential election. Obviously, the turnover on Polymarket and also Kalshi was dramatically bigger than the likes of Betfair and traditional exchanges. And they really got into mainstream popularity through that. And then the approval, the CFTC approval came for Kalshi earlier in 2024, which allowed them to be a financial product. So you can suddenly bet on these exchanges, on sports betting or politics, in states that don't traditionally allow sports betting. So like the likes of California, Texas, and they've done massive deals now that they've done a deal with X, they've done a deal with some of the major exchanges, and you go on and think you're betting with or trading on Robinhood, and you can actually place a sports bet. And so it's really changed the game because state by state was opening up for sports, high tax, high regulation. Suddenly there's just been sweeping change. You can now have an exchange bet and bet on sport in states that haven't legalised sports betting. So it's very disruptive and very exciting. And especially for us, we obviously focus on the tech layer of the gambling space. We don't invest in B2C, we don't invest in operators. And this is more the tech layer in its peer-to-peer. And so we've made several investments in the exchange space and also in the next layer, the liquidity layer of providing liquidity to these large exchanges.
Can you tell us who you've invested in?
Yeah, so we've invested in a company called BetDex, founder of FanDuel started that, another company called BetConnect, which is a UK exchange, and we're in the process of negotiating with another exchange at the moment. So yeah, we definitely think it's interesting and really growing, and and think the liquidity piece is also very, very interesting because you're opening up this large retail market of sports bettors, and obviously you can there's large liquidity to be had for those professional betting syndicates.
So Tom, these betting markets are essentially bypassing state regulations, particularly in the States, but are those states looking to perhaps close those loopholes?
Yeah, well, look, it's so fast moving the US in that it's hard to know. Like, do they now open up because you can play sports bets, or do they try and fight it? Obviously, Donald Trump Jr. is on the advisory board of both Kalshi and Polymarket, so there's political backing and there's financial regulatory approval. So it's really federal versus the states, and who wins in that, I don't know. But I think it's definitely now with several of them opening up. Obviously, Flutter's just done the deal last week. You've seen another deal with Crypto.com just recently come out. So there's several that are going into this space. I think it looks more likely at this stage that things open up rather than things close back down.
Now, speaking of regulation, you mentioned Flutter. It's been forced to leave India. Why is that?
Amazing. Look, there was, I don't think anybody saw this coming. Obviously, Flutter made a very large bet into India, a $200 million acquisition of Junglee. They employ thousands of people there. India's a very large market, and the hope was that it was going to open up more and more, not only skill-based games, but full-on sports betting and gaming. And that's just been completely shut down. Anything that involves cash or real money has been closed in India, and these businesses that they've acquired have large employment have just stopped. And so it's a blanket ban and very unexpected by the industry, and really a great warning, especially for us. We don't invest in the B2C, the operators, but to be geographically diversified. You know, these markets can close very quickly. The regulations and taxation can change, so you don't want to have all your eggs in one basket invested in one market. And Flutter, well, their share price hasn't gone down over the last week and a half. It's actually gone up because they are geographically diversified. So even though you think it's a big hit when $200 million revenue business closes, they've got that many businesses all over the world that they've bounced back in terms of share price, and it's a hit, but they'll keep going.
Well, including in the UK. In fact, it's just pulled £1 million funding from ITV's Champions Full Gallop because of the prospect that the government's going to be sharply raising those betting taxes. How significant is that? What's going on in the UK at the moment?
Yeah, so look, there's been a real UK has probably been the firmest of increasing taxes, regulations, know your customer, all the KYC and compliance, and it's in a way had the opposite effect of what they were hoping, in that the taxation I don't think has increased in terms of as much as they'd hoped, and there's been dramatic leakage to the offshore black market operators. And the reason being is not so much the tax increase. We see the reason being going to the black market is because there's so much compliance in trying to open an account and bet on an account. Where if you bet with a crypto operator in the black market, it's very seamless. Once you know how to do it, you can access those operators, you can sign up instantly, you can place a bet instantly, and you can withdraw very quickly. And so it's really the friction around the customer experience that is causing the leakage offshore. So it's a fine line. Obviously, a regulator, you want to do several things. You want to protect the customer, you want to make sure that you're taxing, you want to make sure that you've got protecting the integrity of the sport. So you want to do these things, but you also want to do it in a way that doesn't cause the friction that your good customers that are betting and want to place a bet are forced to go somewhere else. And that's the fine line. Regulators have, I think, got very good intentions, but it's quite heavy-handed in some areas at the moment, and the growth in the black market has been significant over the last 2 years.
Well, in fact, I guess you can make that analogy to what we've seen in Australia with cigarettes, and the government taxing it to the point where it's obviously pushed it into the black market. So it's the same likely to happen in gambling then, you think?
Yeah, look, I don't know as much about the cigarettes, but definitely in gambling in Australia, it's a real issue because obviously online gaming and in-play sports betting online is not allowed in Australia. And online gaming is gaming is the largest proportion of gambling in Australia, so lotteries and slots or pokies. And the fact that that's not allowed online is really, and many of the black market operators aren't blocked from Australia through IP blocking and payment processing, means that a huge amount of taxation is shifting offshore, and the ability to protect the consumer in Australia, the regulator's not able to, because it's going to operators that they can't oversee. And so it's very difficult. Obviously, as a regulator, you want to move fast and you want to do the right thing, but it's hard to manage in a way that's both protective and you can tax, but also makes it a good experience for the customer.